Guys, welcome back to the Independent Investor Channel. I get this question all the time. How much exposure to any one given sector should I have? How much stock should I buy in technology, industry, material, utility, etc., all the way down the line? What I'm going to do is I'm going to walk you through a sector allocation exercise. I'm going to drop you into my portfolio and I'm going to walk you through one of the tools that is available on my major brokerage, and I would encourage each and every one of you guys to identify the sector allocation tool or the asset allocator tool in each and every one of y'all's brokers, and that way you can run your existing assets through and get it to see how it measures up against the target allocation. It's a really good way of identifying where you're underweight, where you may be potentially overweight, and it'll help you identify where you might want to take some profit off the table or add some exposure to your existing portfolio. So without further ado, I'm going to drop you into my portfolio. Please enjoy as we walk through the asset allocation lesson. All right, guys, welcome into my portfolio. This is going to discuss investor profile when it comes to assigning your own level of risk. Now, obviously, your risk profile or your risk tolerance, as it's commonly referred to, can evolve and change over time. So typically, I would say that if you wanted to start with more of a moderate type of profile or a conservative type of profile, you can do that. But a tool like this, which is an asset allocator tool, can help you visually see what your target allocation or a portfolio with a conservative posture in the stock market could look like, and it can really help you streamline what type of investor that you want to be. Now, what you're looking at here on the screen is mine from Merrill, which is a Bank of America company. You guys know I've been with them for many, many years. I do invest for free with these guys, but you guys will have this asset allocation tool if you're with most of the major brokerages. This is just one of many tools that you could have available to you, of course, free of charge. It just takes a little bit of effort and some want to get on here and really see how your intended portfolio will stack up against a target allocation, or your current portfolio will stack up. And a lot of you guys will find out that if you just run your current numbers through this allocator tool, it's going to give you some recommendations here, and it's going to basically compare your current allocation to your target allocation. And this is really a great visual representation of what they recommend based on historical performance of the stock market, based on how you're currently exposed to the stock market through your holdings. Okay, now I've got this set to view per the 11 sectors, so this actually breaks it down. I actually prefer this view better, and I've got this set to an aggressive profile. My profile falls somewhere in between a moderate aggressive and an aggressive investor, not necessarily fully pegged to aggressive. So I toggle back and forth between, and you'll see that some of these figures actually fall between a moderately aggressive investor and a fully aggressive investor, especially when we come down here to the cash side of the house. I have this toggled to aggressive, and you can see here I do make a practice of keeping a good amount of cash on the side, and of course that goes against what the recommended model calls for. That's fine. These are not hard and fast rules by any means. Okay, these are recommendations, and it's really interesting to know what the asset allocator tool recommends that you do based on the holdings you're asking it to evaluate. And so from an aggressive perspective, you guys can see here that I've got this bond portfolio pretty much pegged. I mean, this is about as close as you can get to the model allocation for an aggressive profile, especially on this intermediate term. I really am aggressive on keeping that in line with recommended allocation. And then the short-term bond I've also just pegged out. This is perfect. This is exactly what I want. And the long-term bond, I'm a little bit heavier exposed. But you'll see when I toggle over to a moderately aggressive investor, that will decrease a little bit because, like I said, I'm in between both of them. So percentage of exposure here, 132,000 as opposed to recommended 182. Now keep in mind here, as an aggressive investor, my risk profile will increase. Okay, I'm carrying less risk in my portfolio by investing the way that I do. Okay, so little less risk, a little less capacity for returns in this portfolio, and I'm willing to give up a little bit of capacity for return to be a little bit more defensive and closer to the vest. So as you can see, I've evolved as an investor. This tool has really helped me understand where I want to be positioned. Again, I do enjoy this view, but this can be used to identify where you have strength in the portfolio. For example, in my portfolio, you can see here the industrials are a little bit overweight. No problem. There's nothing wrong with that. But maybe some areas where you could use some improvement, maybe some areas where you've got pegged. I think the financials, see, I'm very satisfied with where I'm at here with my multiple financial holdings. But if I come up here and look at the technology sector, right, it's recommending I increase it by 24,000. Now remember when I talked about toggling back and forth, this is an aggressive profile. So having that 39,000 or 18.62% of recommended allocation, right now I'm sitting at only 7%. I've put some buy orders in this week to increase that exposure. But if I toggle back to a moderately aggressive, these are going to adjust back a little bit, assuming that someone who carries a less than aggressive profile is going to require a little bit less exposure to what is traditionally a very, very aggressive sector in the S&P, technology, right? So it just kind of makes sense. It'll make sense to you more if you dare to walk through this exercise and answer some of these questions for yourself. And I just want to show you, if you go to this view by assets and toggle back over, just another way of viewing broad sector exposure as it pertains to small cap exposure, growth, value on the large cap, and value side on the large cap, and your international equity. You can see here I'm very deficient in this category. I justify that in a lot of different ways because I can own domestic companies that have significant overseas exposure. So I don't worry too much about buying into products that can give me international exposure. I'm very satisfied with having a lot of my, if not the vast majority of my investments centric in the United States. That's just what I choose, right, wrong, or indifferent. That's just what I choose. So you can see as I've toggled, I'll toggle this back and see and show you guys how this changes the allocation a little bit. This is really, really cool. So you're going to see these are going to drop a little bit more conservatively as I've dropped this back. And you can play with this a little bit. You can toggle your investor profile all the way through conservative to aggressive. I've done it for myself. Again, free of charge if you just wanted to take a little bit of initiative and run your own personal numbers. This is a very, very simple exercise to do. Very simple to draw a benchmark of where you currently are and what you could be looking to achieve. It just gives you a guideline or a goal to shoot for. It could potentially give you some answers for the question of, you know, where could I look to strengthen my portfolio? This asset allocator can provide that very answer for you. If you go in here to the sector, just like I showed you, and said, wow, I wasn't really aware of the fact that my consumer discretionary is really underweight. Maybe I could look for some names that would suit my fancy in the portfolio with regard to that. Wow, I'm right on the money with my materials recommendation. Wow, I'm right on the money with my financials, right? So it can give you those areas of improvement
where you could look to add to the portfolio. So guys, this is a video I've been wanting to do for a long time. I hope it helped you. This is just one of many tools that you can identify in your tool bag, again, free of charge. Put it in your tool bag. Don't use it every single day, but certainly this can help you answer a lot of questions for yourself when you're looking to build your portfolio over time. So I'll kick you back to YouTube, guys. Thanks for visiting my portfolio sector allocation lesson. Thank you.
Right on, guys. So we've just come back out of my personal portfolio. Wanted to walk you through one of the many tools that are available to you to identify where you should be with regard to your allocation based on a target allocation. Now, these aren't hard and fast rules. These are just general guidelines to help individual investors, and these tools are available free of charge. It's just up to you to search out those tools and educate yourself up and run through the exercise yourself and kind of get an idea of what you're striving for with regard to your benchmark and where you want to be with regard to your target allocation. Guys, if it's your first time tuning in, you want to subscribe to the channel, don't forget to subscribe and leave your comments at the bottom in the comments section of this video, and certainly share the video with anybody out there that you know can benefit from the information. Guys, thank you so much for tuning in, and good luck in your investment future.